So over the last week, we've seen the fallout from the recent bank runs as well as the most recent Consumer Price Index report. And then earlier this week, we've even seen the results of the 25 basis point rate hike from the Federal Reserve. And all of these actions have actually driven mortgage rates down by about 1/4 percentage point. Now, if you're a buyer and you see that rates are going down, you might be excited to re-enter the market, but you might be scratching your head when you talk to a loan officer because your interest rate is still going to be between 6 and 6.5%, which for most buyers, that is still going to be a pretty high interest rate compared to what they've been used to over the last 1, 2, 3 years. So I want to share with you a strategy that we've been using today that helps these buyers who are either re-entering the market or maybe they're just struggling with affordability issues in today's market in general. And it's called our seller buy down strategy. So I want to frame this and start off with what a $250,000 home purchase would look like in today's market. So if we buy a home for $250,000, our interest rate is going to be at a 6.125%, and we're going to be putting 5% down. That's going to make our total monthly payment $1,716 a month, including taxes, insurance, and PMI. Now, if we ask for a $10,000 price reduction when we make our offer, that's going to drive our payment down to $1,650 per month, which isn't a huge decrease from the original $1,760. So there's a better way to do this. Instead of asking for a $10,000 price reduction, we want to ask for $10,000 in seller credits to be allocated towards a interest rate buy down. So when we're going to buy down that interest rate, we're going to be able to reduce it from a 6.125 down to a 4.75, and that's actually going to drive our payment down to $1,511 per month, which is a major decrease from that original $1,716 per month. What we're doing is we're actually reducing the effective cost of the home, and it's going to be like buying a $219,000 home. So this is equivalent, and it shows in column 4, to a $31,000 price reduction. So for every $1 you buy your mortgage rate down by, that's equivalent to a $3 reduction in sales price. Now this scales up too. So if you're purchasing a $400,000 home and you ask for a $15,000 seller buy down, that's going to be equivalent to a $45,000 reduction in the sales price. So this is a really great tool for buyers who might be struggling with affordability issues. Maybe they need to be purchasing at a higher price point, but they can't afford it with where rates are at. And this is a strategy that can help bridge that gap for them and bring that effective cost of the house down. Now, this is a permanent rate buy down, so this rate does not change over time. This is a 30-year fixed rate mortgage still, so they have that rate for as long as they have that mortgage. So if you have any questions on this, or you have anybody who you think could benefit from this, or maybe you're a listing agent and you have a seller who might be struggling to move a house, this is a great marketing tool to help people while still maintaining your seller's equity in that home. So if you have any questions, please let me know and have a great weekend.